Hey, what up? What up? What's going on? So check it out. Today it's what day is it? It's the 3rd of January. So basically we going over I have a um what is this thing called? Let's see. So I'm with the Fivers account. I have a 100K account. It's working up to 200K. And so basically I have to work up to a profit of 6,000. And that's what we're gonna do on this to get the live account. So basically, I'm trying to scale up to 250K, but I'm starting at 100K. Um, and let me see if I can find this actual the scale so you can see it actually. So that'll help you get a grasp on what I'm trying to do this year. As far as like the boot camp, they call it the boot camp. Um, so let's look. Let's pull it up over here, and let's see if we can do this. And we definitely can. Uh, Video file. Stop. We're gonna stop sharing real quick, and then we're gonna go to share screen, and we're gonna go to this one. All right. So hopefully you guys can see this. All right. So basically, right now, what I'm doing is like again, this is the Fiverr.com boot camp. This the trades that have a 5K boot camp. You know, you will get 25 payout on the second stage up. Of course, the second stage means that you actually have the live account. So there's three trading steps, and you have a whole year to get all three, steps. So there's no rush with this. All right. So basically, starting off with the 100K, the maximum loss is 4,000, and the profit target is 6,000. All right, so just keep that in mind, and then you scale up. You scale up in all those things of that nature. If you have the 25K account, of course, you start with 25K. Or if you have the 100K account, you're trying to do that boot camp, you start with 25K, and maximum is 1250 loss. Profit target is 1,500 loss, of course, and then your ratio is 1 to 10, which you can still. That's a good ratio. You still can actually make profit if you using risk management. And again, you don't have 30 days. You have a whole year to complete all these three. All right. So just keep in mind, this is how you scaling up. Once I get the account, I want to scale up to 250, and you can go to up to a maximum 4 million. If you keep using your actual risk to reward management. Just remember, this is not a race, so just take your time. All right. So again, that is the Fivers.com, and I'm trying that this year. Okay. So then we're gonna go to back to the actual screen so we can actually get what happened today. All right. So just remember, I think if you looked at my past videos, we're always looking at vertical lines by Chris Chapman. If you go to indicators, it is right here. Vertical line, time zone, Chris Chapman by Unknown Unicorn. Just clip that in. You're going to need that. You don't really need the 200 EMA. That was for something else. And then I have the Darvis box, of course. Let's just turn it off for right now. Darvis box helps me. It's just another indicator to help me. Another confluence indicator. All right. So I have it on. I have my other EMA at 25. It's nothing special. It comes with everything. 25 close, and you can put EMA. I got SMA. To me, it don't really matter. So from right here, what I do is always look at the daily time frame to see which way it's going. Always, you know what? Let me put that in here for you. Always look at daily time frame. Always look at your daily time frame, people. Let's go. So I'm sorry about that. Hey, look, the reason why I iterate that real quick is because I've lost so many trades. I've lost so many trades doing it without looking to see which way it's going. And as you can see, if you see the 25, where's my arrows at? Here go my arrow. Let me see. Let me put this arrow on real quick. Boom, up here. If you can see, it's underneath the 25 EMA. So me personally, that's the way I look at it. If I look, if it's under the 25 EMA, I'm only looking for sales. And then if you look right here, it bounced off of here. So potentially, if you see that around 9:30, and this is a sale, of course, it's on the daily time frame, it's not a strong sale candle. But if you look at it on a sale, you only gonna look for sales. If it's a bearish candle, I'm sorry, I keep saying sale candle, but if it's a bearish candle, you're only gonna look for sales. You're not gonna look for buys. All right. So let's erase that. Get off of that. And then we're gonna go down to, so if you see right here, it always blocks off my time frame from 9:30, from 9 to 9:30. All right, as you can see, this is actually 8. But let's do it. Let me do it for, I have it on Chicago because I'm in Central. Let's do New York just so you can see. So this is 9 o'clock. That's when we're looking at when the markets open up, equity markets open up. All right. So, and let me bring this in some more so you can see it. So just remember we said what? That is bearish. And now here's another one, my Darvish box. All right, Darvish box and sell, buy and sell. Darvish buy and sell is by Ceyhun, Ceyhun. Now, just keep in mind, just because I have these buys and sells on, and let's do this. Let's put so you can see the confusion of it. Just because it says buy and sell doesn't mean you buy and sell at that point in time. Because look, there's a sale, it went up. There's a sale, went up. There's a buy, went down. See what I'm saying? You got to have some type of strategy when you use some of these indicators. All right. So I'm gonna just stop it right here. Boom. Now you see this. All right. You see this right here. I always mark off the highs and the lows. I always mark off the highs and the lows. All right. And I normally go for 100 points or 200 points. All right. Always mark off just for this strategy. Highs. All right. That's my highs up here. And these my lows down here. Low price. I'm just saying low price. And let's move them out some ways, out a little bit more. All right. Let's go to the next candle. So keep in mind, do not take anything inside of here. That just helps your win rate go up a little bit better. All right, so you can see it broke above here, right? I'm using this one like that, like I'm supposed to be. Then my mic is down here. So you can see it broke above, right? Am I going to take this buy? Now, why ain't my arrow back up here? There you go. See right here? Do not take that buy because guess what? We're looking for sales underneath the 25 EMA. All right. And we're also looking, this is a bearish candle. So we're not looking for buys. And this right here tells me nothing. All right. Let's go to the next candle. Boom. See, there's a sale right here. All right. Let's look at that. We have some confirmation. We have a sale. All right. We look over here, 25 EMA, bearish candle. I even do a trend meter sometimes. Look. My trend meter, and if you want to know what the trend meter is, just go to, let me find it for you. Trend meter down here by Lee J MC, trend meter. All right. I just use that as another indicator as well. Sometimes I use it, sometimes I don't. All right. But if you can see right here, you normally like to have three confirmations. All right. Daily time frame. Underneath the 25 EMA, that's one. All right. Then we have, look at this, a bearish candle. That's two. All right. Go back down to the 5-minute time frame. Oh, I'm sorry. Let me go to this daily. Keep that on daily. And then go down to the 5-minute time frame. We have three. We have a buy signal right here. All right. Let's go here. Look at this. Underneath the low price. That's 4. That is 4. Then you have 5 right here. That is 2 red candles. Everything is red. You have 5 confluences right there. So guess what? I'm gonna tell you the 6 confluence. The main confluence before you take. Oh, let me see. Confluence. Hold up. Confluence. We're taking trades. Is risk management. Let me see. Management. Sorry about this, guys. Confluence. Let me get this management. Management. Always is risk management. I know you're tired of hearing that. All right. Sometimes people over leverage things of that nature. And even though I have a 100K account that I'm using, doesn't mean I over leverage. Doesn't mean that. All right. I can only lose 500 5K or whatever the case may be. So if you look right here, you take the trade. Let's go for 150. Let's go 1 and 1. All right, 150. All right, so here's a tip that I use. Here's a tip that I use. All right, and I'm going to show you this, and I'm going to show you the what you call it as well. All right, and I'm going to show you the site to go on and everything. So if you see right here, this is my entry point right here, and this is how I get to take my risk management. I always look at this. Okay, here we go. Let me open this up, and then let me switch screens to. Let me switch screens to this one. All right, so look, I go to cashbackforex.com, tool position. I don't know how I found this, but I found it. All right, so look, opening price. I'm going to paste it right here. All right, and then I would also go to my stop loss. My stop loss. All right. All right, and then I will put my stop loss right here. Paste. So you look, you got a 100K account. All right, so that's 1%. And it's okay to do 0.5. All right, so you can only lose. Hell, you can if you got a year, you don't even have to do that. I did this morning. Right? I did 0.2, which I got $218 back. So guess what? All right, you do a 1 lot trade size. You know, for if you got 100 points, you just make sure you do the right lot size for taking this trade. All right. All right, so let's go. And then we can go from there. So I can show you, hopefully we ain't got nothing on here. Nah, I'm not gonna show you that because reason being I don't have it blocked out. I'll do it tomorrow and I'll show you the trades tomorrow. So I took a trade today. Let me see if I can show you. So one of the trades I took, it actually stopped me out because I made my stop loss too quick. All right, I made it too quick. So let me see right here. As you can see down here, I took a sale volume, and then I basically just had to get it back. So I got it it was 100 minus 100, and then I got stopped out because I placed my stop loss too close. All right. So, but if you look right here, I did the volume 0.5, and then I actually got my 219 profit. So basically, I'm back up to I'm actually back in profit again. All right. So just keep that in mind. All right. So let's go back over to here. All right. You can do the 200, you can do the 150. You catch it right here, all these confluences. So let it play out right here. Let me let it play out. All right. Let me get rid of some of this stuff so it's not clogging your. All right. And sometimes everybody tells you to plug and play. Play and leave it because I promise you'll start. You know what? Let's use the old. Okay, let's use this. Boom, boom. Let's take this, and that's why I like the replay tool because it actually is. Let's do this. Give me. All right, so let's run it like this. I'm sorry, guys. I had to take a call real quick. All right, let me do this one more time. All right, so let's run it. We did 4 lots this time. Boom. Okay. So I like doing this because it actually, it keeps a balance if you win or lose, especially when you're back testing over a certain time frame. And hopefully, y'all can still hear me. All right, see, look at that. Let's let it run down to 150. I don't think it went. I think it's going to end up time. There we go. Stopped us out right there. About 380. Well, I should have stopped out right there. But let's see if it keeps going. So it's about 150. And I think it's going to do, where are we at? All right, let's keep it running. All right, let's see if it plays out. Just for sake, but we already got the 150. Let me move this out the way. Let me move this over here. Boom. There we go. See that? Played out. We actually got the whole thing. All right. So it actually would have been here. I think with the way I noticed my the spread on my account, it would have took me out right here. Actually. Boom. But if you see right here, if your spread didn't take you out, it actually came back off the 25 and went down. Boom. All right. So here we go. And as you can see, it actually gave you a lot more. It actually gave you, I don't know who that is. It actually gave you 200 points. Let's go down here. 278 points. And now it's sitting at about 194. So that's fine. Did 150. You could have did a 2-to-1 ratio. Let's see what 2-to-1 is. All right. Let's go down, go down, go down, go down, go down. Actually, you would have still been in there if you was 2-to-1. That's fine. But me personally, I wouldn't take it to tomorrow. All right. I'd do 1-to-1s. I'm not going to even sit here in front with you. If I do 150 or 100, I just keep it at that. See, even if we did 100, I got in late this morning. So that's the reason why. Because I was at physical therapy. So if you did 100 to, and so this is 1.5 to 1. So boom, you got that. If you did 100 stop loss, you'd have got your 2-to-1 ratio, and it would have been about 199 points. 200 points basically. All right. Same thing, but you get what I'm saying. This morning, it was actually a good time because actually I think there's news tomorrow. So just be careful of the news. Just be careful, guys, of the news. All right. Tomorrow, and let me bring this over here and open this up. All right. The news. Let me see. Because make sure y'all can hear me still. Okay, there we go. All right. So tomorrow there's USD news. Let me move some of this stuff off of here. Let's just do red folders, and let's just do USD and GBP. All right. So as you can see right here, we have FOMC minutes. That's 1 o'clock. That's on Wednesday. So honestly, as of last time I did this last month, and I wish I could find it. I actually got my 100 points before that morning because it actually went up and then it shot the hell back down. So I probably won't be trading at this 1 o'clock point because that's well past my time of trading, and I like to leave the market alone for that one. And then the non-farm employment change on Thursday and on Friday. I definitely don't trade on Friday. That's just me being on the safe side. And then you have the non-farm payroll, non-farm change. And then you look at the very next week, you have the another bank holiday on the 16th. But CPI news, CPI is normally one of them times where the market has those big candles. So just keep in mind for the next week or so, there's going to be some red folders. And just be careful. I would say, me personally, don't trade before the candle goes up. Wait for the candle to actually make its move, sizzle out, whatever the case may be. Unless you're an experienced trader, then forget what I'm saying. All right. So just remember today that tomorrow there is some big news. All right, so let's just finish out on this. All right, there is, like I said, 9:30 on the 5-minute candle. All right, you could go 15. You could go 15. All right, because look at this. I'm gonna show you. You'd have still been in the trade, but if you look at, if you do 200, I'm not doing that. Let's do 200 points. So when you see those big candles, you know, make sure you go high enough, because you know it's going to retrace a little bit. So if you look right here, right, you still have been in the trade. You wouldn't have been out the trade. So, you know, if you like to hold overnight, things of that nature, you know, I like to get in and get out. Let's see if 150 would have worked too. As well, 150 would have worked as well. All right. But sometimes 100 is a little too risky. So if you did 150, 150, you know, you would have got out around, you know, 12:45. All right. But look how that worked. You know, half of this candle. All right. Half of the candle. The candle, this was a Maribosa candle. All right. 277. Just do half of that. 150, whatever the case is. I don't know verbatim. But if you looked in that and left it alone, all right, boom, boom, another sell candle came. Look, strong sell candle right there. Came back, retraced a little bit, boom, all right, and came and got you for a good 150 points. Good for the day. All right, you can't do the 5-minute if you want to get in and get out. You can do the 15. See how the 15 as well. All right, right here, but it changes a little bit. So the highs and lows. So the 5-minute is where I take my entry at, and I use those 5 confluences. Especially if you have 6 confluences, is best. You're good to go. See what I'm saying? You'd have been in and out with 150. All right. No later, if your spread didn't get you right here, no later than 11 o'clock. You'd have got in at 9, been out, and you got you a cool 200. See what I mean? Easy, well, not easy money. I've been studying this strategy for a while, and I've been trading for almost 3 years now. So this is something simple for you guys. It's real simple, real simple. Check it out. Even if you don't have this confluence right here, the Darvis, all right, just looking at the way it's going, the 25 EMA, all right, 25 EMA, you're blocking off the time frame 9 to 9:30. Don't take anything between 9 and 9:30. Look, your highs and your lows, mark them off. All right, as you can see, it broke here, but you see this, basically this wick. So that means it didn't break above. Boom, it broke below. You take the sale right there for 150, or you do 100 if you get in right. I like to, you know, if you catch it right here like I normally do, but I caught it down here on the 15-minute. That's why I got stopped out. But if you catch it right here, you can do 100. And then if it stops you out, you have another opportunity to get in like around in the next in that same period of hour, because you might have got in too late or too early. All right. So if you look at 100 and 100, you know, 1 to 1, all right, that's easy. That's a quick 200. You out the market, and with about from 9:45 to 9:55, I would say 10 minutes. All right. So just keep that in mind. This is a good strategy for you guys. I hope this helped you. I'm gonna start trying to do live feeds every single day for trading wise. And you guys have a good trading week.